Hello and welcome back to the Agriland Pavilion on the final day of the 2023 National Ploughing Championships. Now, no one needs to be told that it's been a very difficult year of battling on-farm costs. And as we know, it's been a very difficult year, particularly for some sectors. To talk more about this now, I'm joined by Donal Whelton, Head of Agri with AIB, and Michelle O'Hara, Regional Manager with the Money Advice and Budgeting Service, MABS, and also James McDonnell, who's a Farm Management Specialist with Teagasc. You're all very welcome today. Donal, if I could come to you first. AIB has seen an increase in demand for new money. Where has that been coming from for the ag sector?
Yeah, so I suppose to your earlier point, Francis, it's definitely in the last couple of days, conversations with our customers has been a little bit different than the conversations we would have been having 12 months ago. Obviously, there's been a significant change in the agricultural sector over the last 12 months. But I suppose I'd like to say that, look, farmers are very resilient. They've come through a lot over the last 5 years. I suppose you go back maybe 4 or 5 years ago, we had Brexit and the impact that was potentially going to have on farmers. That was quickly followed in by COVID and the potential impact and the negativity with regard to possible closures of beef processing plants and milk collection facilities. Farmers came through that. Then we had the impact of the war in Ukraine and increased input costs and the impact that was going to have. And from our point of view, what those 3 or 4 things have really shown the AIB is how resilient the sector is. Despite all those challenges that farmers have had to face, they're coming into this correction in 2023 in a very strong financial position. We've the lowest level of debt that we have on farms in maybe 10 or 15 years, and also what's a great indicator of financial strength of any sector is level of overdraft utilisation. And on the agri sector, across all the sectors, we've the lowest level of overdraft utilisation coming into this correction in 2023 that we've had for 4 or 5 years. That being said, we are having more conversations this year in relation to support for farmers. There is a buffer there from last year and relatively good farm incomes last year. Farmers have that buffer, but there's no doubt they are maybe using a little bit of that buffer now for a number of reasons. Obviously, reduced output prices, increased costs, impact of weather, increased interest rates. There'll be tax liabilities that will come payable now as well from the relatively good year, and that's all impacting on cash flow.
Have you seen any particular trends whenever you're talking to customers?
Yeah, so I suppose while we're having a lot of conversations in relation to, particularly because maybe of the nitrous derogation and the impact of that on the 3,000 dairy farmers that are directly impacted, but that change is going to impact all farming sectors. So there is definitely an increased demand for land, both for land purchase and also land rental. Having a lot of the conversations in relation to that. We're also having a lot of conversations with our customers in relation to sustainability initiatives and what they're doing on their farm, whether that's the use of protected urea, low emission slurry spreading, increased animal welfare initiatives on their farm, animal housing. There's no doubt farmers are very much up for the challenge. They are playing their part. They've started to invest in technologies that will lower their carbon footprint, and that's going to continue. And we've seen the progress that farmers have made over the last 12 months with a reduction in the agricultural emissions over the last 12 months. So I think interest in land, interest in sustainability initiatives, and also interest in maybe some cash flow support options as well. And I suppose what we'd say to the farmers is that we have access to SBCI money, that's the Strategic Banking Corporation of Ireland money. We have energy efficiency loan schemes. We have a Ukraine credit guarantee scheme. We'll have access to another fund towards the end of Q4 that will be there to support farmers. And it's low cost funding that's available to farmers to support their businesses in the months and years ahead. And what we're saying to farmers, come and talk to us as early as possible. We're here to support you. We take a long-term view of the challenge of the industry. We didn't get excited last year when output prices were very, very good. We're not going to not be there to support the sector here when there is a little bit of a correction. We're here to support the long-term sustainable development of the agricultural sector. We fully recognise there's bumps in the road on any farm journey, and we'll support the sector through these bumps.
Yeah. And James, it's really important for farmers to make their money work smarter, isn't it?
It is, yeah. And I suppose the thing about it is, after the last year in the dairy side, where they had incomes that were almost once in a lifetime. And I remember talking to a friend, and he said to me, it's harder to recover from a good year than a bad year, because you might have spent cash flow on capital, and now that money is spent and there might be a tax bill due around the corner, so we might be going to Donal to look for a little bit of a loan, or maybe to build a loan on the building we did out of cash flow, to put cash back into the system. So I suppose the thing about it now for farmers to do is maybe to sit down and do a short cash flow to see how there will be at the end of the year, starting into the new season next year. So we have short documents like a 5-minute cash flow. You can do the profit monitor to see how efficient you are. Have you lost any efficiency in the last 12 months, to get yourself back on track from now going forward? And, they're good things to do. And I suppose the long-term view, farmers aren't getting any younger, and they also need to look at succession, and that's a long-term plan. So we're after having, a good year. We need to look at where do we want to be in 10 years' time. And, the nitrates thing has been a conversation here this week. What's the long-term direction of that, and how is that going to affect the business? Will we manage to keep onto it? There's risk in all farming enterprises, and, I've been on record before talking about risk. And the risk in the past was people, some people would stay under quota and always be under quota, and others always went over quota. And the derogation is almost going into that space now a little bit. So we need to take the long-term view, as Donal said, and do long-term planning. So at this stage of the year, it's always, the worry about the tax bill. Dry stock farmers have had an okay-ish year. Tillage are struggling a little bit. The dairy farmers, not as good as last year, but that was once in a lifetime. So we need to sit down, take stock, do a short-term cash flow for the next, say, maybe 5-6 months, see how things look, and then look at doing some long-term planning. So.
And Michelle, as Donal and James are saying there, there has been higher costs this year. So the fortunes of farmers has changed very dramatically in the last 12 months. So if some farmers do, and farm families do find themselves maybe in financial difficulty, what's the best steps for them to take?
So always engagement is the key there, Francis, because the longer that you wait and not deal with an issue, the more likely it's going to be more and more difficult to actually deal with. And our experience in MABS is that it is very difficult sometimes for people to make that first reach out to an organisation like ourselves, say, look, I think I need a little bit of a hand here. And it might be as simple as just getting information regarding what they can do. As James referenced, planning. You said planning a few times, James. So important that when you're doing your budgets and you're doing your household budget, which is an additional challenge for farming individuals and families, because they're running a business, a self-employed business, and then they're running a household as well. And one of the things that we would always encourage people to do is to separate the two. Even have a separate bank account for both, so that you can deal with one in one way and deal with the other in a business fashion. Engagement, as I said, is key. So if you had a challenge with a loan you might have with AIB, the first thing that we would tell you in MABS is to talk to AIB. In the event that you feel that you can't, or you're reluctant to for whatever reason, then we can do that for you. We'll engage in your behalf. We can start the resolution process on your behalf if you so wish as well. But look for the information. Assess where you are with all of your finances. Go on to our website, which is mabs.ie. There's a huge amount of information there, but equally so, we have 60 locations throughout the country. We are a free, independent, confidential and non-judgmental service. And what I would say to anybody listening today, there's nothing we haven't seen. And that's the reality of the situation. We're here to work on your behalf, and we will find solutions for you, whether it just be managing your finances better, wondering why you're struggling in week 3 of every month when you think you shouldn't be, doing all those things better, or if it's a more serious issue, such as you're over-indebted. Many of us are in debt in one way or the other, but the key is whether you are over-indebted and how you deal with that challenge. In MABS as well, we fully understand that there's a whole psychology associated with being over-indebted. So people experience a lot of different emotions at that time, be it guilt, shame, embarrassment, frustration, and all of those issues. We understand all of that. We have over 30 years experience in dealing with people and supporting them to have a long-term sustainable outcome, which is what we're trying to get them to.
Yeah.
So don't be afraid, pick up the phone, call into one of the offices, ring the MABS helpline, we're there to support you.
Yeah. And sometimes it's just important, isn't it, James, to look at the basics, go back to planning the basics, the cost of feed, vet bills, labour costs, insurance. Like, just because you've always done it a certain way doesn't mean you should always continue that way.
Exactly. And I suppose, the places, sometimes people wonder, where do you start? Well, how much is in your bank account today?
Yeah.
What bills are due over the next 3 months? What income are you expecting to come in from cattle sales or milk sales or the check in the post, over the next number of months? And how does that tally up? What's left over? And then it's over, right. Then you can see what you need, to service debt and run the household.
Yeah.
So it can be very simple, and most people have the banking app on their phone now, so they can check the bank account now, and they can, do a partial cash flow to the end of the year. And for the majority of farmers, it's the main time of the year that they sell their animals and that they get the check from the Department of Agriculture. So it's very easy to add up the income side. And then it's, well, who do I owe money to, from work that was done earlier on in the year? So spreading the silage, paying the co-op bill, looking after the contractor, because you want them to come to you when the silage is ready and the weather is right next year. So there are certain people you have to look after, to keep the business running smoothly. And I think just even sitting down with a blank page and working that out is a start. And of course, all of our advisors in our 50 offices nationwide are available to help people do that. And sometimes it's just about worrying, right, there's a bit of a bill due. Should I go to Donal for a bit of short-term finance? Is it an overdraft? Is it a term loan? What have I done in the last number of years? What has caused this pinch point? And it could be that there was a little bit of cash flow used to buy a machine or put up an extension to a building, and maybe a longer-term loan should be built on that to put cash back into the system.
Yeah.
So it can start off quite simple, but as has been said already, if you internalize it, then you get under pressure. Then you're not making the right decisions. So it's good to talk to somebody, and everybody has their own support people. It could be the next door neighbour, it could be the local Teagasc advisor, you could be very friendly with your local bank person.
Yeah.
So do go talk to somebody.
But farming is very different today than, say, when it was when my dad started out, And so when you look at the criteria for lending to farmers now, Donal, is it a very different atmosphere, a very different climate?
Yeah. And just before I answer that, I just want to pick up on one point, and like what James is saying there, and Michelle as well, is 100% correct. Come and talk to us as early as possible if you're experiencing a little bit of difficulty, or you anticipate maybe 2 or 3 months' time. Come and talk to us, because in all our AIB branches, we're there to support your farm as well. The other thing, and James and Michelle both touched on it, the importance of quantifying the level of support you need for your business.
Yeah.
Do that cash flow. It doesn't have to be a complicated document. It can be quite simple document. What's coming in, what's going out, both on your business but also on your personal. Because what that allows us to do is put the right amount of support in place for your business, but more importantly, it allows us to get it right first time. The worst thing that we don't like doing is that a customer comes in, they look for argument's sake 20 or 30,000 euro support, and then 3 or 4 months later we find that actually wasn't wasn't enough.
And as Michelle and James are saying, it's the day-to-day running, it's the future planning, isn't
Absolutely.
it? And that is a really important differential to make.
100%. To your question though, in relation, what are the key considerations? Okay, so there's a lot of talk there about that the banks are interested in how much assets you own and all that. The number one consideration when we look at any loan decision, and it's the same now as it was when I started in banking 23 years ago, is repayment capacity. The first issue that we have to determine is repayment capacity. We work off, I would say, conservative budget prices, and then we stress test off them. So unless we can get and show our second line that the repayment capacity is there on a stress scenario, that we take into account the what if scenarios, what if there's a disease outbreak, what if there's a weather cost, what if there's a labour issue, we need to show a certain debt service cover. After that, then you get into the other criteria, such as track record is so important. Has the farmer been there before? Have they done what they said they would do? I always encourage farmers to under-promise and over-deliver, that, build up your track record, build up your credibility, instead of taking a loan out for, like farmers always like to borrow short term, but we'd encourage them. If the bank will give you 10-year money, take 10-year money, and if you pay that back over 4 or 5 or 6 years, you've improved your credit score, your credit grade, your track record, because you've over-delivered on what you said you were going to do. So track record then is very, very important. And then other things that are taken into account, such as how much money that they're putting towards themselves. Is this a recurring issue for the farm, that just because the first bump in the road, have they the ability to manage volatility? Because volatility is very much part and parcel of farming now. Like every farmer, we're not going to have a straight line. It's not going to be plain sailing forevermore. And over the next 10 years, we're going to have dips and troughs. And it's particularly noticeable, these peaks and troughs are getting more and more pronounced. So you need to have a system that's resilient to be able to weather these shocks when they come. And we'll be asking that question. How is the business able to weather these shocks? And James made a very, very important point. Obviously, last year was a relatively good year. Guys looking for support, we're going to ask the question, where did the money go that maybe was generated last year? And there can be very, very valid reasons, and an option, as James pointed out, and Michelle as well, that retrospectively funding that capital expenditure that a farmer did out of their own resources, and they might have done that 20 or 30 spend on farm roadways or a calf house or a calf feed or whatever the case may be, we'll retrospectively fund that, and that gives a direct cash injection back into the business, and hopefully will support the business until output prices recover again.
And one other key issue that we unfortunately won't have time to get to today is farm succession, and I know all of your organisations are very keen in ensuring that is a key factor going forward too. So maybe at another stage you'll come back and talk to us about farm succession. But for today, Donal Whelton, Head of Agri AIB, Michelle O'Hara from MABS, and James McDonnell, thank you so much from Teagasc for joining us. Now we're going to pop back out and see what else is happening at the National Ploughing Championship.